a trucking company in Canada and in the United States have gone bankrupt over the past week. So, what is going on with the Canadian economy? And more specifically, what is going on with the global economy and what is going to happen in the future? This isn't good news because it's kind of a barometer if you think of what's happening in the economy right now across the globe as well as in Canada. And you've seen the same thing play out in the US too, which we'll get into now. Truck drivers told not to report to work as YRC Freight Canada files for bankruptcy. So basically, this was announced by Unifor, which is a union here in Canada. As far as I'm concerned, there wasn't really any excuse given in Canada to why it was shutting down. It just says that the company, which was a major player in the less than truckload freight, announced today that it would be filing for bankruptcy and cease operations on both sides of the border. Unifor Local 4209 represents 58 owner-operator truck drivers and 70 company line haul drivers who work across the country. So, this company is going bankrupt, and you've also got another company going bankrupt, which is in the United States, which I'm going to show you right now, and you probably heard about this one over the past week. So Yellow goes bust, files for bankruptcy, stock will likely go to zero. So and this is the real interesting part about this. Cash-strapped US trucking company Yellow Corp has ceased operations and is filing for bankruptcy after failing to recognize and refinance over $1 billion in debt, says the Teamsters Union on Sunday. So again, it was announced through the union and they weren't able to refinance their debt. And the interesting thing when it comes to trucking companies, obviously they are a good barometer for the economy, because obviously if goods aren't flowing so easily within the economy, that's going to impact your logistics companies, your freight companies, your trucking companies more than any other companies. They're going to feel it first, and they are starting to go bankrupt. So I think this is more than just the bankruptcy of these two companies. And when you look at what's happening in China, it becomes increasingly interesting as well. So I want to show you this chart because this shows just the insanity of what's going on in China right now. So China export prices have completely tanked. Look at this. They have tanked way more than they did even in 2020, which was around right here. And they've tanked way more than they did at any other time over the past since 2008, essentially. We're going down to like those 2008, 2009, 2010 levels of export price decline. So you can say that this pretty much has a strong correlation with what goes on in the economy, because obviously we know around the 2015 area was where we narrowly missed a global recession right there. And then obviously 2020 happened and you see that play out. But what's going on right now is even worse than that. So there is cause for concern with this, because what is going on with China and what a lot of people in the mainstream media were pointing to around January and February was, this optimism of the China's reopening from all the policies that they had during the pandemic. And it has essentially been a complete flop. And not only that, China is still dealing with real estate problems and a real estate industry that is failing miserably and is largely structured the same way as the US real estate debacle that happened in 2008 when it comes to securities, etc. So I would be limiting exposure to banks like the Bank of Montreal, for instance, that are heavily exposed to China, and they've been operating in China, and largely we don't know of their activities in China. They could have been lending in the real estate space, or they could have not have been lending in the real estate space. But the fact is, in China, there's an incredible amount of fraud. So I don't touch things in China with the 10-foot pole. And obviously there's fraud in countries like Canada and the United States, but in China, they take it to a whole different scale. And then if you look at the manufacturing PMI in China, that's also going down. So, you had this reopening sort of boom, I guess you could call it, but it wasn't really a boom. And since then, it's just continued to go down. So also, we're seeing what's happening in China And that is not good because China is where all our products come from. In Canada, the United States, in Europe, largely the products that we buy are coming from places like China. So if you're seeing major problems in China with their manufacturing PMIs, if you're seeing export prices are tanking, what is that telling you about demand for their products coming from places like the United States and Canada? It's telling you that they're way, way down right now. And also, it's telling you that inflation is going to come down as well, at least in terms of the products that we buy from China, because the export prices are dropping massively. So, how did this happen? How did this unravel? And it largely comes down to what happened in 2021 and 2020, when the government unveiled this massive fiscal support and they said you don't have to pay any of your loans. People had a massive bump in income. We see that on the income chart. And then essentially what happens is they used that income and they went out and bought everything. And then we saw the supply chain turn into an absolute mess. Everybody was loading up on inventory because all the companies were led to believe that this is this booming economy, including companies like this, this YRC Freight that has filed for bankruptcy. They were caught up in this as well. It's essentially the bullwhip effect is what's happening. And the same thing when it comes to Yellow as well. When it comes to Yellow that's filing for bankruptcy, it's the same thing. They have been caught up in the bullwhip effect, which is essentially they were piling up all this inventory, expecting this massive demand going into the future. And then what happened in February, March of 2022, that demand, it went way down. So, what's happening is we're starting to see, it's becoming evident that this isn't just a Canada problem. It's not just a United States problem. It's a global problem where we're seeing deflation is actually coming, and we're seeing deflation in certain areas like in the China export prices. And what's interesting, and I just want to note it, is because what's happened there with Yellow and in terms of them rolling over their debt, it's important to note how the private sector in Canada is massively exposed. If you look at private sector debt to GDP, it's not the best metric in the world, but it is a good metric to use. And, we touched near 300% in 2020 in terms of private sector debt to GDP. You saw all of the weakest parts of Canada had the highest unemployment rates, places like Calgary, because you've got loads of businesses in Alberta which have been dealing with recessions, like multiple recessions since 2008. So those businesses have took on even more debt. So unemployment skyrocketed in places like Calgary and places in Alberta. And you also saw that in places like Toronto, places that people wouldn't necessarily think were places that had massive amounts of debt. But I would encourage you to go back and look at the places where unemployment skyrocketed in 2020, because it's going to be the same but worse in those places coming up in 2024. So if you want to know where the best places are going to be and where the worst places are going to be in terms of employment and prepare for that, then go back and look at that data. Maybe we should actually explore that on this channel at some point. That's probably a good video idea. Let me know in the chat and the comments if you think that's a good video idea. But you can see here 300%. We peaked out as well, which is not a good sign at all. When you peak out in terms of private debt to GDP, it's not a good sign at all. And we've also peaked out in terms of the money supply. It looks like the money supply continues to go down, as you see here. So we're starting to see monetary deflation, which means that in a credit-based economy, we are very, very close to an implosion point in the economy. This can't continue, because when you have this credit-based economy, you can't have monetary deflation happen for long before the whole system implodes on itself, because it is reliant on the continuing issuance of credit. You have to think of this like a pyramid scheme or a Ponzi scheme, in where that you constantly have to have more and more new money entering in. Otherwise, people can't pay their existing debts off because people are so far in debt. So I know it's an insane scenario to even picture, but this is literally what's happening. And this is literally where we're at right now in Canada. So, when it comes to monetary deflation, which you can clearly see is happening, the money supply is coming down. We've gone through the Bank of Canada monetary aggregates as well, which are also declining. So we've got major signs and warnings of what's coming. And we've also got a inverted yield curve, a massively inverted yield curve, which is showing that insiders, people inside the banks, people who know what's coming, because there are going to be an elite group of people that know what is coming, are actively out there betting against that, including the banks themselves, because they know exactly what's coming. The implosion is coming of the financial system, exactly like 2008. Well, actually, I shouldn't say that. It's not going to be exactly like 2008, but in terms of the financial system imploding, the global financial system, it's going to be very similar to 2008. And the countries that are the most in debt, that are most reliant on credit, will be the ones who are hardest hit. And think about that. Canada was in the opposite place to the United States in 2008, 2009, because they weren't as dependent on the United States on credit. But as you can see, guys, from what happened with essentially the private debt to GDP right here, you can see that we are incredibly dependent in Canada on debt in the private sector and also in the household sector. So that does not mean good things, and credit tightening could be evident right now in the money supply. So it's going to be very interesting to see how things play out from here. I want to thank you so much for watching, and if you've enjoyed this video, you might like this playlist here. You might also like this video here. I will see you in the next one. Take care, guys. Bye.